Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How we doing out there? Hope you're having a good day. Louie, how we doing? Looking good, my man. I love it. Hey, welcome to our show. It's called The Closing Beat. We are financial advisors here at Jazz Wealth, just trying to be normal people, helping you get your dough straight. We like to help you save money. And of course, we do investing for you. Long-term is our focus, but I like to talk about the markets each day here, just to give you an idea of what we're looking at and what's going on out there. Speaking of saving money, I'll save you some money right now. This nonsense, if you happen to see that on the shelf, that's a no-go right there. That's a Reese's with a potato chip inside of it, and they won't even tell you what kind of chip it is. That'll save you $1.59 right there, so you're welcome, right? That was gross. Anyways, welcome to our show here. How we doing, Landon, Doc, John, Harry? Welcome, man. Mike, hey, man, how's it going? Kyle, Shadow Dragon, I love it, man. Darren, welcome to the mix here. Let's get started. Well, that's going to be 7 days, actually. 7 days of plus or minus 1% moves in the market there. You got all kinds of stuff going on, really. I mean, it's not like market moving news that's kind of happening. You got the Biden-Putin showdown that happened earlier, with a video conference there, a big deal. Seems like the Omicron fatigue is kind of setting in. We're like, is this a big deal? Is it not a big deal? Guess it's not a big deal. And that's the perception at the moment. That could change, but that's how everybody's looking at it right now. And you actually have something under the surface that I'll share with you. You got tax harvesting in full swing now. The end of year tax harvesting from advisors, mutual funds, exchange traded funds, those that are active, hedge funds and things like that. You've got that rotation away from their losers for the year. And where does that money go? It's got to go to the winners. So we'll talk about that in a little bit. If we start over here, we'll look at the Dow. So the Dow, rather rapidly moving here. It's up 16% year to date. Most of the gains were earlier in the year, if you're looking at that one. It's now just getting back to positive for the last 3 months. So go from here, just look back 3 months. You see how it's just above that line? So we're just about 1%. You have 1% gains over the last 3 months, 16 over the entire year. So that's a quick way, without even looking at the chart, you could just say, all right, all the gains happened earlier in the year. It's been kind of sideways, and now things are waking up again. So that's how that's going there. That's a broad rally today. If you're looking through a lot of the stocks, only a handful of names didn't participate. You got American Express with its move there. Apparently I was a day early closing that position, but it's all good. Up 4% on the day, back to the 20-period moving average. You got Apple hitting new highs. I believe got an upgrade today. I don't see it actually off the top of my head. It was earlier this morning. You got Salesforce.com. Actually, I closed that position today. I got 54% of the total premium collected on the earnings drop there. So excited to be done with that one. If you're unfamiliar, I just like to share short-term fun trades that we do around here in the office, not relative to our long-term investments, but I like to share that. So as far as the Dow goes, you get the idea. Financials, semiconductors, again, even Intel participating today. You got Visa participating today. I closed that position at 49%. I'd sold the 285 puts. Gave me a little grief, actually. It made a new low before it turned around. I got 49% of the total premium there. And that had the biggest total return on capital. If you remember, last week we talked about why that was a position. So that one was going well, and you can go through the whole list in the Dow, right? Lots of 1% gainers. Only stocks that didn't really participate today would be Verizon, which has not really participated. Interestingly, it's also the closest stock in the S&P to a new low. So in the S&P 500, you have every stock off of its 52-week low, and some are like 100%, like Diamondback Energy is like 150% off the low. Well, Verizon is only 2% away from making a new low, even after today. Well, it lost 0.5% today. So that'd be the weakest performer there. And in the Dow is the only one that really didn't participate besides Merck. Merck is coming all the way back down to these lows, a little bit extended here, but just out of favor in the short term. Oh, we got Walmart too. We'll throw Walmart in there. Not really participating in the rally today. If we look at the S&P, there we go. Second place year to date and almost back to all-time highs there. 24% year to date today was led by tech stocks and FANG. I'll say it that way. Do we still say FANG out there? So look, you include some of the stocks like NVIDIA, obviously a strong day. I'll look at the semiconductors as well. NXPI semiconductors, strong to new highs. You really have to be looking at semiconductors as a short-term trader or long-term investor at the moment for add points or maybe just starting new positions and stuff. Lam Research, one of the better ones, also higher on the day by about 5.75% there. And then just take a look. You got like Facebook, the big weighted stocks. Facebook up 1%. We already talked about Apple, so you understand that that's pulling the markets up as well. Amazon about 3% on the day, although it hasn't given you any real reason to be excited about it, right? Look at it all. It's a whole bunch of mess in there. What do you do with that? Netflix recovering a little bit, up 2%, and then Alphabet almost 3% gain on the day. Energy as well, right? So look at the price of oil, up 3.25% on the day. Diamondback Energy, one of the bigger ones, about to hit new highs. That was my pick for the year. It's officially in 6th place out of the best performers in the S&P year to date. So looking pretty good there. And anything energy related. So if you're looking even, you can look at the energy ETFs, like the XOP, up 4% on the day. The OIH, these are just a lot of the popular ETFs for oil and energy. XLE is one of them as well, up 2% on the day. And well, that's just because energy was your second best performer today in the S&P, up 2%. What else do we have here for the SP? All 11 sectors were positive on the day. Technology would have been your leader. It's kind of obvious by now. XLK is a symbol you can use to look at that. You had two other sectors gain 2% or more. That'd be XLE and consumer discretionary. Oops, nope, going to be this one here. XLY. And then from there, almost all of them gained 1% with the exception of utilities, which is your second weakest on the day, and consumer staples, the other one, XLP. Interestingly, these two sectors are the most overbought sectors in the S&P right now, but they were not the best performers today. Shows you how much everything is playing catch up there. Oh, by the way, if we go look at the, just to kind of elaborate on that for a second, look at the weakest stocks. So we said consumer staples are the weakest. Utilities are the weakest today. Well, when you're looking through that, if you scroll through the weakest stocks in the S&P, you're going to see consumer staple stocks, right? So you got Clorox lower on the day, McCormick lower on the day. Nobody interested in those. Hormel, which has been quite weak overall. You got Edison pulling back, otherwise very strong there. Philip Morris down 1% on the day. So you could see really quick how weak the consumer staples actually were. They're all at the bottom of the list on the day. You got the Russell 2000. There you go. That's now 5 days in a row with plus or minus 2% gain. So you got in the S&P, you got 7 of the last 8 days where we've had 1% or greater swings. The Russell one-ups the S&P and says we now have 5 days in a row with 2% swings. Is that odd? All right. I was one of those things. I'm like, I don't know. Is that odd? Let's take a look. So there are 13 other times where the Russell has actually moved plus or minus 2% in a 5-day or greater window. So it is kind of odd because you're going back to the 70s for the data that you're looking for here. The last time that it did this was in March of 2020. See if I can pull it up somewhat quickly here for you. Change the time frame. Let's go back 2 years, March 2020. Let's go back 3 so I can actually show you real quick. And go all the way over here. Here is your move. So this is the record, by the way, 13 days of 15 days, plus or minus 2%. That's the record. Now, what's interesting is most of the time when there is 5 or more days, actually every time, where there are 5 or more days the Russell gains or loses 2%, it's on the way down, right? This time is different. This is a completely different one because we had some on the way down and some on the way up. So it's a little different story there. Actually, I put together this guy right here. There you go. So here is forward performance after having 5 or more days at plus or minus 2%. So you know that the data being used for this is 13 other periods, March 2020 being one of them. And so here's what we got, a little different type of chart to look at today. Most of the time in the short term, when the Russell has more than 5 days of plus or minus 2%, it's on the way down, so we see a lot of weakness. So over the next week, the average loss is 2.49%, and the median loss is 1.37%, and that'll be everything I'm showing going forward. Over 1 month, we still have average losses of 4%. Over the next 3 months, we still have losses as well. So I guess what I'm trying to say is like normally I could present this data and be like, uh-oh guys, doesn't look so good going forward. However, this time is different because we didn't have those plus or minus 2% days in the midst of a sharp downturn or some other downturn. It's kind of at record highs and just slopping around back and forth. So much different here. Over the next 6 months, though, if you ever see this again in the future, that's where the tide starts to turn a little bit. So no hurry on buying those sharp dips in the Russell 2000. And then over the next year, very positive. Now, what I did at the top is I put the percentage of time that there was actually a positive return. So only 41% of the time was this average not accurate, and in fact it generated a return that was positive. Going out 1 month, only 50% of the time. 3 months, 41% of the time. So we just kind of can see that front 3 month period is a bit of a coin flip. It's a tough time to get excited and want to participate, but as you go further out in time, you hold on or add more to your position or whatever, 91% of the time, a year later, just fine. You're going to see an average gain of 31%, median gain of 24.9%. Now, let me know in the comments whether you're watching live or watching this later. Is that interesting to you? Because like I'm trying to figure out like where do we go? You know, it's a new year coming up, and we're like, what do we bring to the show? How do we change it, make it better, make it more unique, something you can't see anywhere else? Is it that, or where do we go with this? Is that not it? Let me know, because we have access to pretty much every bit of data now that we're grown up a little bit. You know, I'm just saying, get a few extra phone calls these days. All right, let's look at the Nasdaq. This was the beast, by the way. So the best performer today. You got a 3% gain on this one. First place year to date, naturally, deserves it there. Was in first place here today. Today it was tech and biotech, which really led the way, and it really everything in between, unless you're looking at Comcast, which had a rough day there today. DocuSign, which continues to be in a bad shape there. People just repricing that stock. And Peloton, which refused any kind of bounce at all and has refused any kind of bounce. Look at that. What do you think is going to happen when the market has a weak, let's say it rejects this whole rally here and the market starts to sell off? Do you think this one is all of a sudden going to go higher? That wouldn't be a safe bet. That'd be a tough one there. Now, a minute ago, I mentioned tax harvesting in full force. And today it was really evident. If you were to take, can I somehow do this? Oh, look at that. Okay, so let me go like this. Let me see what I can do without messing this up. Can I go like this? All right, so here's the list of the Nasdaq 100. And you can see it. I'm trying to leave room so you can see the ticker and stuff. Now, I've sorted the list by the weakest to the strongest, right? So the biggest loser today was, in fact, Comcast, lost 5.29%. Take a look off to the right here and see if you notice anything. Was that a stock that was trending higher that somehow was met with bad news today? No, it's been trending lower. All right, let's go to DocuSign. Is that a stock that's trending higher and for some reason it was just a bad day and we chalk it up to more sellers versus buyers? No, it was already down. Charter. Oh, and also with DocuSign, what's the probability that that recovers before the end of the year, right? So if you have built a fund or you are a mutual fund manager or someone with lots of money that you're managing, well, do you want that to show up on your statement at the end of a year, right? Do you think it's going to be a good position? Maybe not. Maybe your money's better off in other positions. All right, Charter, another one, trending lower, right? Siri, not doing anything really, right? Peloton, just mentioned that one. That one's weak. So you can see that the pressure, all the stocks that felt the pressure on an otherwise magnificent day were those that people were starting, the managers, fund managers and big-time institutional traders starting to say, that's a dog for now. I might come back another time. Maybe it's a better opportunity. It gets oversold. I don't know. But for right now, I don't want that to show up in a portfolio, right? So they're getting sold off. Otherwise, wouldn't they have been lifted today? Would not the index fund investors have pulled the tide higher like they did for so many stocks? They were not, or they weren't able to. Walgreens as well. So when you look through that list, you go, okay, where are my dogs that are likely going to be sold off through the rest of the year? Today was the first time you actually got to see that these are probably the stocks that you're looking at seeing further selling pressure there. So a little bit of a side lesson. Just thought I'd share that with you. What else do we have here today? Let's take a look at the sectors real quick. So something I don't spend a lot of time on, but we can today. Let's take a look. All right, so sector-wise, I'll go through a few quick things here. Best sectors year-to-date performance are going to be energy. So XLE is one way to look at that one. Year-to-date performance of about 47, now 49% year-to-date. That's your best performing sector in the market. If you look at the second best performer, it's real estate. Breakout today, adds another 2% today. Real estate's going to be at 34, almost 35% year-to-date. Worst on the bottom side of things, if you're looking for those dogs, it's going to be utilities. And it's not that these are bad, still up 8% year-to-date, just not participating as much. And the other one is consumer staples, right there. Same gain for the year, about 8.7%, maybe 9% by now. And so that's the spread, on each side. What are your gainers? What are your losers there? As far as the sector with the greatest number of stocks above their 50-day moving average, it's going to be utilities. 85% of stocks in the utility sector are above their 50-day moving average, and that change is actually increasing, whereas almost every other sector is seeing a little bit of a drop-off. Stocks, the weaker stocks are getting beaten down a little bit. Second place there would be consumer staples, right? 71% above the 50-day moving average. So strength be getting more strength, if that's how you say it. I don't know. And then the weakest ones are going to be consumer communication services, XLC, currently in a downtrend with the most amount of stocks under the 50-day. It would be 90% of stocks in that category sector under the 50-day. And energy. There you go. Energy with now, and that's just because it's moving sideways, with only 80% of stocks above 19% of their stocks above the 50-day moving average. 80% of them are below. What else can we cover? Dividend. What's the best dividend paying sectors at the moment? Anyone want to guess while I guess where I left my data here? Best dividends. Oh, okay, there we go. So it's energy. 4.05% in the energy sector. So if you're looking for the highest yielding sector, that's where you'd be standing there. And then utilities come in second, 3% there. Followed by consumer staples at 2.5% and real estate 2.3%. The lowest yielding sector at the moment. Can you guess? Can you guess what it is? It is consumer discretionary, XLY. Only a 0.5% yield there overall. So a different way to look at the sectors, things that we don't normally talk about that are interesting day to day. Maybe tomorrow we'll do the most overbought and oversold stocks in each sector, give you an idea which ones are leading the pack, which ones are dragging behind there. All right, a couple things. So for me, just if you're keeping up, I closed out the Salesforce, talked about that already. The IGV, that was a one-day move. For that was 48% of the premium in one day. I did not know that was going to happen. Just luck of the draw there. And that was based on the data, which I couldn't show you yesterday, but take a look. I pulled it up again. Charlie was tinkering with it while we were talking, so it was his fault. It didn't work. So what I did is I said IGV fell 9% in 9 days. How often does that actually happen? There are a total of 16 other times in the last 20 years, or as far back as we can look, that's actually happened. And the performance going forward, slightly positive, but basically didn't do much at all. So like I mentioned yesterday, I took the worst of what had happened, these bigger declines, and I said, well, I'm just going to go sell a put somewhere around that range right there. So that worst case scenario, going by the stats, maybe I'll still be, able to fight the good fight or something like that. And so I took that data. So using the research tool to come up with a trading idea that ultimately worked out in one day, but I obviously didn't know that. And remember, this is saying over the next 9 days. So if you have 30 days or so and you know that the average performance is moving forward, then great. As long as maybe, you find out where that worst performer is and say, well, I don't want to deal with that. Let's go and, do something down there. What we're working on is the ability for you to now say, all right, Dustin, I see that something fell 9% in 9 days, and here's what happened the last time. Here's what happened before, the 9 days before, the 9 days after. But I'd like to know, maybe I'm going to hold the stock for 3 months, right? Maybe I'm going to sell some puts or buy a call spread or something like that, right? Play the option game. And maybe you want to say, I'd like to take this data now, and instead I want to look forward 90 days. So I don't want your 9 days here. I want to look forward 90. So we're actually building out a tool where you can specify, Okay, when this happens, pick the time period you're interested in, look forward and see those stats rather than being limited to just that. So that's a work in progress. Apparently a pretty tricky one, but we're going to get there. So IGV's closed and Visa is closed. That just leaves me, as far as the trades we put on during that decline there, the fun trades, leaves me with Activision, which is still giving me a little grief, the Disney play, eBay, which is almost ready to come off there, and PayPal. Right? Still got the PayPal 175 puts. Slight profit. Nothing too exciting. And soon, by the way, I'm told, we'll actually be able to just share this in the research site. So, you know, that way you don't have to watch the whole show. If you're just interested in one thing, you'll be able to see it there. All right, new highs and lows for the day. Then we'll do some other stuff and take your questions. There were no new lows. Remember, Verizon is the closest to making a new low. It's about 2% away. So that is it. Other than that, if Verizon doesn't fall 2% tomorrow, then you really don't have any new lows for tomorrow as well. 36 new highs. Couple to point out. Tractor Supply breaking out over this new little range. Can you see that? You can see that. Yeah, just breaking out over this little range here. Thought that was interesting. AJ Gallagher, this was the potential breakout from yesterday that just touched new highs. Today, that is continuing, so people obviously found the same thing we were looking at yesterday. Same with Marsh & McLennan. This is that breakout that had a wider range, but today, still people willing to play for that breakout. Old Dominion, come on now, Old Dominion. There we go. There's your breakout today. I don't like that it didn't close near highs, so loses a point for that. But that was that type breakout we talked about yesterday, or potential type breakout, and that started to happen today, so it was good. And lastly, going over to the REITs. You got REITs moving to new highs. Remember, you look at the real estate sector, and that was the second best performer year to date. So you understand why some of these more heavily weighted stocks in something like the XLRE have been pulling the whole sector higher, PSA being one of them. Stocks in the news, what do we have? There's quite a few things, right? See what we got here. American Airlines CEO is going to be leaving. He'll stay the chairman of the board. Nobody seemed to care. You got AutoZone with earnings out. Big day for AutoZone, up 7%. We happen to own that stock. Like to see that. Same store sales up 14% for AutoZone. Does that not make you think about people that are going, can't buy a new car, or I don't want to pay those prices for a new car? My car is worth more than it should be, so if I sell it, I have to pay more for a car that I probably wouldn't pay that much for. I think I'll just fix my car, right? So obviously a lot of that going on, and good for AutoZone. DWAC, the sort of non-existent social media platform at the moment that people are waiting for, up 16% on the day because David Nunes, Republican congressman out of California, I believe, has joined as the CEO of the company. So maybe they get something done there if you're hopeful. What was the name of that, by the way? What is the platform going to be called? Freedom? Yeah, I think somewhere along there. It's not DWAC, I can tell you that. That's just the shell company they're using, but it doesn't exist yet, but I don't know. Nice to have some options, I guess. Truth? Yeah. Oh. I wonder what that is. That did you put the truth on there? Okay. Only the truth goes on truth. Well, we'll see what it turns out to be. Wouldn't it be funny if they just said, like, it just looks just like Facebook or something, just out of spite? And they're like, yeah, it's the same thing. Whatever you want. Or Twitter or... that would be a good... Yeah, I get that. All right, enough of that. Intel. In the news, and actually had a good couple days, right? So yesterday being higher with the market, good sign, because we hadn't seen that before. Today, a good sign as well. So it owns Mobileye. It has for a few years now. They're actually going to spin that out and make that public. That makes Intel just slightly more profitable, and they'll, of course, be a shareholder. And Stellantis, you probably saw that in the news, just about 2% day. These are the guys that make Jeep, is their biggest brand. And they've decided we're going to focus on software, kind of like BlackBerry did when they were like, we can make the phones, but that software is where it's at. Same concept, just has to deal with cars this time. So that's in the news. And remember, Solar Edge is going to be joining the S&P 500, and that takes place at the end of the month. And so is FactSet, right? Yeah, FactSet. was the other one, and Signature Brands. Yeah, that was the other one. Hanes Brands is being kicked out, Leg and Platt and Western Union. Yep. And then a handful of changes in the S&P 400. Macy's is joining in there as well. Earnings tomorrow, you've got Campbell Soup, GameStop, oh boy, and Restoration Hardware. Restoration Hardware, or formerly Restoration Hardware, now known as RH, has been higher 4 of the last 5 earnings reports, meaning the reaction to earnings has been favorable for the bulls. It's also a little extended here, short term, huh? You got a recipe for maybe something there. I don't know how they can continue to sell more and more and more of this expensive stuff, but if people got the money and they want to spend that, it's the one stock I guess I just don't get. But anyways, that's what's going on tomorrow. GameStop is the other one. So GameStop has only been positive 2 of the last 8, by the way. So all you meme stock traders out there, if you're hoping for it to head higher, I will cheer it on for you. But you're basically looking at 2 of the last 8 being higher. In other words, 6 of the last 8 responses have been lower to earnings there. Okay. I will take your questions if you have any. Let's see what we got here. 22-year-old Camry. That's right, man. Why do anything with it, you know? I have a, what do I have? A 60-year-old, no, it would be 80 years old. I have an 80-year-old truck this year, actually. It'd be an 80-year-old truck, and she runs just fine. She's actually right over there. Got it in the warehouse here. Just thought it'd be a cool look. But, yeah, doing good. Intel is taking Mobileye public. You got it. Ashish doesn't like these back and forth markets here. They're ridiculous. Seems like everyone's bullish or bearish. How does one swing trade efficiently? If you think about it, it actually makes you more, the probability of you being successful greater. More volatility is good for the short-term trader. They eat that stuff up. Because imagine if we said, like, okay, here's a box, right? And there's a ball moving back and forth. And I said, you have to tell me where that ball's going to stop, right? You got to reach in there and try to grab it. If we're moving in a box this big, chances are the ball's moving slower. You can reach in there and grab the ball. If it's in a box this small and it's just bouncing back and forth, you might reach and miss the ball, right? You need a bigger margin of error as a trader, a day trader, swing trader, whatever you call yourself. If you have more of movement, then the odds, the need for you to get the exact best price becomes less desirable, right? Because if it's already doing this and you can just hop in and pick somewhere else to sell, that's better. But if it's only doing this, you better be really accurate with your entry price. So actually, traders like the increased volatility there. Yep. Andres, looks like we're headed for new record highs, doesn't it? Yeah. Yep. You put your battery in your AutoZone, Tesla breaks down. Oh, no. Yeah, AutoZone will put the battery in for free, but you need a Tesla battery. I've heard that's a different story there, huh? Matthew, a little bragging there. I love it. 8% NVIDIA drop. Yeah, a lot of times, and you got it. So a lot of times these extended drops or even quick drops, that extra volatility allows for the quicker, more higher probability trades, right? Because you're getting this wild back and forth. Good job. Darren, do you have a favorite stock that you would short or buy long puts on for an overall market hedge if you don't trust the Nasdaq rally? You have a stock you would trade in anyway as a market hedge? So I don't really buy into the hedge type thing. I've always been of the mindset, and it's just my background, right? Just having to make those decisions. If you believe you need to hedge by 10% or some number, why not just take 10% off? It's the least expensive thing you can do. It doesn't cost you anything. You're not adding additional risk by maybe your hedge being wrong. You're just saying, I'd like to hedge by 10%. I will take the 10% off, right? Everything else costs you something in some way. And so I think that would be my approach there. Thank you, Kirk. You like getting a new car about every 6 years. I bought a Honda. Sell it, get another payment. Everybody's got their approach. I don't think there's a wrong way to get a car, by the way. Some people, it fits them to get a lease, right? So I always like to hear about the person instead of being, like a normal financial guru that would say debt is bad. I don't know. Maybe debt's not bad. Maybe your business bought the car. Maybe your business should lease the car instead. Maybe it makes more sense that way. Maybe you're driving for Uber or something. I need to hear more. So I always kind of let the data set in for the person first and then go, well, your advantage is here and you keep going over here. I mean, you got to stop that. How low can AT&T go? I know, right? That's one of the other dogs at the moment. It's a couple percent, just over 3% away from hitting new lows as well. So AT&T and Verizon, that's also what's dragging down communication services, man. That's horrible. Now, what you kind of hope here is this a higher low? You're going to get a higher. You like that this flushed out to new lows. Anyone that was likely to sell, we can see in the background that volume there. We can see that anyone that was waiting to sell probably did. So do we really have that many more sellers at $23? Who knows, right? That would be insane. So between all of this now, have we not flushed out all the sellers? So now what we're looking for is, do we get a reversal, even a small one to start here, where it's only moving higher because the selling pressure has stopped? Maybe not because people are saying this is a good deal for AT&T. We don't have the sellers to deal with. That's what you hope for here on both Verizon and AT&T, by the way. Yeah. No. When you had a corporation, the business leased the car, and then I bought out the lease. Tricky. I like it. And totally legal, right? You can't play those games. Also, if you have a lease right now and it's coming to the end of your lease, is now not the time to consider just buying the car? I've had to help a lot of people with that. Might work out in your favor. I love it, man. Well, you guys enjoy your new cars out there. I'll enjoy my 80-year-old car, going on 81, but running stronger than Betty White, man. Just solid car. Can I say that? Betty White's 100, by the way. This will be her 100th Christmas. I watch that channel, and they're like, it's all the feel-good movies and stuff, and they're like, Betty White's 100th Christmas. Yeah, fact check it. Yeah. She's a hell of a woman. Yeah. I love it, and hope I have the same problem. I don't know. Actually, I don't know. Yeah. She's in good 100-year-old shape. That's what I would want. Yeah. At any age, really. Even if I live to be 80 or whatever. As long as I'm a good 80, let's have it. All right. Enough of that. Well, I'll wrap it up there. Hope you guys enjoy the rest of your day. Thanks for hanging out with us today. Another successful day without saying something to get you canceled, right? That's a thing these days. Don't say that. I got the death stare from Cody. I don't know. You never know. Hey, have a great rest of your day. I'm going to wrap it up there. And thank you for watching and supporting us here. Let me know about the data thing, because remember, my opinion, it doesn't matter. I want to be the vessel that delivers data, and then you do what you need to do with it, right? So where are we off path and where would be more interesting and stuff? I'm going to be here anyway, so if I can share stuff that you guys like to look at and learn from, I'm happy to do it. Enjoy your day.